airing of
the Word on Wealth Radio Network.
This is the Word on Wealth with Kory Quackenbush of GQ Law. Gary is a San Diego financial solutions attorney, protecting people like you. The Word on Wealth team of financial experts is here to answer your questions and help preserve your family's financial future. Now, here's your line.
Happy Tuesday, everybody. So good to have you along on the Word on Wealth. We're glad to be here. We are still in, Monday, Tuesday, Wednesday, Thursday. We talk about all things money, and we're doing estate planning. So yesterday was tax. Today, this is a super special day. Okay, listen up on this one. But we have a day. We have Kory Kavanewsky. He is a loan officer. So more than that, it's kind of like, how Wednesday we have Ken Pecos come on, and he's not just a guy that sells real estate. He knows the markets, the money markets, how things affect, when you should buy, timing and all that. Well, Kory is the same level of intelligence, but dealing with mortgages and loans. So I was actually, through a friend of mine, able to wrangle Kory and talk him into coming on the show. Now, he's got experience with radio, but he brought up a couple topics with me, and I just went, Kory, we have got to get on the show together to talk about the things we're going to talk about today. So, Kory, thank you so much for being on the show. How are you doing today?
I'm doing great. Thanks for having me here.
Yeah, this is super cool. So the thing, Kory, we've talked about this a little bit, is we have a lot of listeners, conservative talk radio, 2 stations going all at the same time. But when you told me about this, hey, Gary, that's something I'd like to talk about on the air. You're going to be paying, because if you have good credit, you're going to be paying more for your loans because of this thing that the Biden administration is deciding to put in. So first of all, I want you to tell us a little bit about you first, like an introduction, easiest way to get a hold of you. And then I want to go right into this, the good credit home buyers subsidy.
Yeah, well, thanks. I appreciate that. And I like that you mentioned Ken Pecos. He's a good guy for sure. I've been doing this for 21 years now, originating home loans locally in San Diego, but also all over the country. Ranked typically in the top 20 in the nation in the industry in terms of loan production. And I think what that says about me is that I love this business. I love what I do. I love helping people understand the business and how to be successful in it as a borrower. There's a lot of little hoops and there's a lot of little bits of information that if you don't have can really work against you. And actually, our topic today is kind of along those lines. And the headlines read something like this: Biden raises costs for home buyers with good credit to help risky borrowers. And that does kind of sum it up, really. I mean, what has happened May 1st is that increased interest rates for borrowers that have stellar credit, borrowers that are making significant down payments that are really not considered at all high risk, in fact, are absolutely considered low risk. They are now subsidizing the cost for borrowers that are higher risk, that have not as good of a credit score and or are putting less money down. Now, how does he do that? How does that happen? Well, he imposed these different loan level price adjustments that apply to certain loans that meet certain criteria. And you look at the down payment, you look at the exact credit score, and you kind of determine what your punishment is going to be. And if you had, prior to these changes, if you had a really kind of low credit score, it was really super costly to get a mortgage. And Biden's sort of take on this is, well, we need to reduce that cost because we want this playing field to be a little bit more level. We want more people to be able to get into the housing market. That's better for everybody. And so it's this extra tax that has been passed along to those who have really good credit, who have worked really hard to save money and to preserve their credit. They've passed the cost. The government is passing that cost on to those borrowers. So one thing I do want to make clear is that someone who's got a lower credit score is not going to get better loan terms than somebody who has a really high credit score. There has been some misleading information in the news about that. That is not true. But the discrepancy between someone who's got a high credit score and someone who's got a low credit score is not nearly as wide now in terms of interest rate. And if you've got a great credit score and you're putting down 20%, which in our market is a significant amount of money, you are going to pay a little more to get that mortgage than you would have paid just a month or two ago.
That's initial knee-jerk reaction to that is that just doesn't sound right.
Hey, Gary, can I ask him a quick question?
Of course.
Yeah, because I think this is actually, I'm looking to buy in the next couple of years. And so it begs the question, why do I want to have stellar credit when at the end of the day, when I go to use it, it doesn't matter?
Well, it's a great question, and that's how a lot of people are responding. And I want to be, real clear here. You're still going to do better if you have a really good credit score than if you don't. So what I'm certainly not suggesting is you go out and start missing your payments, because that's not going to help you. Yeah, you're right. There's less sort of motivation. There's certainly less incentive to have a really high credit score. There's just not as much incentive there. There's not as much of a reward. So yeah, it's
2 minutes.
The question. It's a tough one, but still, you are going to do better if you've got a higher credit score.
Okay. The thing, and it interesting, like I'm going to bring that. I'm on the Andrea Kay show tonight. She likes to talk about this kind of stuff. I'm going to bring it up with her and get her alarming reaction to this. But it's just one of the, I guess the whole thing is, it ends up in your wheelhouse, Kory, as a loan officer, as the branch manager, as this guy that's kind of doing this for your whole career. And then you look at these things and go, really, why should there be penalties on people that have really worked hard? I mean, it's been, for most of us, it is a big deal and a big challenge to try to get your credit score up. My daughter just bought a house in Escondido. And for her, they've worked really, really hard, being really careful with money and debt management to try to get their credit score up to where, it was way up into the mid 700s because she got a better rate. And it just seems like the guys that are fighting to get there, to try to get their score higher, to, because they're trying to, when you're buying a house for $1 million, $1.2 million, $1.5 million, $1.6 million, it makes a big difference if your rate is a little bit higher. It makes a huge difference over the life of the loan. It just seems like this awful tax that we just don't like.
It's a tax. It's right in line with that discussion for sure.
Now, so Kory Kavanewsky is an expert loan officer. You won't find a better guy in San Diego that knows more about the industry. What is the easiest way for people to get a hold of you, Kory?
Well, you can call or text 619-554-1327. Again, 619-554-1327. We lend here in San Diego and all across the nation.
All right. So that's going to be a number we're going to repeat throughout the show. If you forget the number, you just go to my website, gqlaw.com, and you can just call my office and we'll give you the number again, 619-554-1327. Right. We're coming up next. We're going to talk a little bit more about this penalty, but I want to get Kory's take on how should we be responding to this? How is this going to affect our first time home buyer people? You're listening to The Word on Wealth with Gary Quackenbush and Kory Kavanewsky.
You don't need to know everything. You just need to know where to find answers you can trust when you need them. Welcome to The Word on Wealth with Gary Quackenbush. We're here to help you build, protect, and transfer everything you've worked hard for with expert estate planning, trust administration, inheritance, and probate. Call Gary and the team at gqlaw.com, 855-500-TRUST. You're saving and investing for the future, and that's good. Have you ever stopped to think, where does my money actually go? This is Faith-Based Investing with Anthony Wright.
Most Christian families don't understand this one thing. The money that you're saving for retirement helps fund the abortion industry as well as other liberal anti-family causes. It's the sad, dirty little secret of American investing world. And here's the good news, though. You probably also didn't know that just a few minutes of your time and we'll screen and clean your investments for you. There's no cost, no obligation. Learn the truth about your own investment mix. Then the choice is yours. Remember, the word says when God's money is in the hands of the righteous, the people rejoice. Well, we also are fiduciary investment advisor representatives. That means that our firm makes a pledge to always act in your best interest. Go to BibleSafeInvesting.com Download a free copy of my book, Faith-Based Investing, or call me at 931-RETIRED. And please don't forget, listen to Faith-Based Investing this weekend right here on Family Talk.
So, Gary, we've talked a long time about estate administration. So what is that? And why is it important?
Estate administration is the distribution part of estate planning. So when someone passes away and they leave money to beneficiaries, the property has to be administered. So it's like taking it from the decedent to the survivor. That's called the estate administration process. So usually you're going to have a successor trustee that's named in the trust. So have no idea what they're doing because they've never done it before. So then they call on GQ Law and we walk them step by step on how to be a successful and good successor trustee. We also do the required notifications. We notify the Department of Health Services and all the legal requirements so that they can have the estate administration done properly. We help successor trustees be successful.
Call or click to request your free consultation. GQlaw.com, 855-500-TRUST, GQlaw.com.
Who will you trust with the biggest financial decision of your lifetime? If you're planning to buy or sell a home in San Diego County, do what I do and work with the true San Diego real estate experts. Ken Pecos and the Pecos Group helped me and my family. They can help you. This is Gary Quackenbush of The Word on Wealth. You hear Ken every week here on The Word on Wealth. He's our expert. He's got integrity, exceptional service, deep knowledge of the San Diego, Coronado, and South Bay regions. These are just some of the reasons that Ken Pecos has completed hundreds of transactions. He manages a powerful team of professionals at the Pecos Group. From single-family attached homes to luxury high-value waterfront properties to apartment buildings, Ken Pecos is ready to help you avoid problems and costly mistakes. Learn more online at kenpecos.com. That's Ken Pecos, Pecus.com. Or call 619-977-8419.
DRE number 010566969, brokered by eXp Realty.
You're not alone. Ask for the legal help you need. Call Gary and the team at GQ Law, 855-500-TRUST, or go online and download Gary's free ebooks and videos. Read Gary's blogs. Call or click to request your free consultation or to talk with a member of the GQ team. That's GQlaw.com, 855-500-TRUST.
You're live.
Welcome to The Word on Wealth. This is Gary Quackenbush and my guest, Kory Kavanewsky. He's a loan officer, mortgage guy. So we just call him the home loan guy. He can get you money for homes, mortgages, all that. And we have him here right to the bottom of the hour. If you have a question for Kory, we're opening up our lines to call in. That's 888-344-1170, 888-344-1170. Call up and ask a question if you have a question about mortgages. Kory, on this quite alarming announcement by our current administration saying, hey, effective May 1st, which is a couple days away, if you have really great credit, you're going to help subsidize people that just don't have as good a credit. Now, I know from a standpoint of some people they decide they don't want to ever use credit cards. They don't ever want to have any debt at all because that's what they've been advised by, their financial person or whatever. And they go to get a home loan and they realize, whoa, I don't have any credit. I've never developed credit. I've never worked on it. They pay a little bit more, but I think they realize that and they go, that's okay. That was my thing. I decided to not try to build up any credit. And I get that. And I just see, family members that do that, and they say, no, we understood that. That was the thing. And now you kind of take away this, oh, let's just make it easier. Let's subsidize it. Let's tax the people that really super try hard and have good credit scores and have worked on it for 30 years. And let's tax them so that people that just really haven't, for whatever reason, so.
Well, and that's the other end of this, right? Is that, people listening could listen to this and say, oh, geez, I'm so sorry that, people who are doing so well have to maybe give back a little bit. But beyond that, what kind of message does it send to those people who don't have great credit that, hey, you don't worry about it. Don't really have to work towards that because we're just going to make it easier.
Yeah.
And, making it easier for people is not always the right way to go about things, right? You're not necessarily going to get the results and the trust and the loyalty and the quality borrower that you want when you just make it a layup. And to put some numbers to this, in case those listeners out there are thinking, well, geez, how much more is this going to cost me? Well, you have a choice. You can either sort of pay this quote unquote tax by accepting a higher fee at the time of origination. In other words, the loan is going to be more expensive just to get the loan in terms of fees. That's one option. And then the other option is to say, well, shoot, I don't want to pay the extra fees right now out of pocket. So then what happens is the lender increases the interest rate to cover that, what is essentially a tax or a penalty. Okay. And so I was just doing some quick math during the break there, and you look at like an $800,000 loan at say 6%, which is about where rates are right now. Then that's going to equate, if you've got a really high credit score, off the charts high, you're going to pay about $80 more a month than you would have before this change. $80 probably not going to be too life-changing for somebody in that position who's going to buy that property. But you start to add that up, right? And you say, okay, $80 a month over, a year, that's $1,000 a year. So you're talking 30 grand over a 30-year term. It's not insignificant at all.
But Kory, it's not going to get a better rate for the person with the worst credit, right?
Well, the person with the worst credit is going to get better terms than they would have gotten before this adjustment. So yes, This is going to lift up that borrower. Okay. What I was trying to say earlier was I don't want anyone to be misled into thinking that the person who's got the lower credit score is going to do better than the person who has a higher credit score, because that's not the case. They're just not going to be punished as much for having a lower credit score. And again, what Biden's thoughts are here, well, I think Biden's looking for votes, quite honestly, but I think beyond that, he is trying to, kind of talk to the masses, right? And say, hey, we need to get more people in this housing market, make home ownership affordable for more people. People who have lower credit scores tend to have more debt, tend to have less income, just, statistically. Now interest rates are up because the market has changed, and they're going to get hit real hard because of their credit score. How can we make it easier? All right, well, we can improve pricing for them a little bit, and we can take that and move it to someone who's doing really well. And it's a tax move.
Yeah. I mean, why should we focus so much on improving the economy, getting, buyer confidence up, boosting small business, to get get the workforce in there, really doing their thing, and then make it so there's more money moving and then people can afford houses. Let's not do that. Let's just kind of like take some money from some guys and give it to somebody else as a tax and say, you know what? We don't want to get the economy moving. The economy is kind of stinky right now. And we're in this recession and we have inflation. Let's not deal with that. That's the main problem. Let's not do it. Let's kind of prop it up. Yeah. I just don't like government props. I don't like it. Yeah.
And that's the irony in this too, is that the housing market, quite honestly, is actually doing pretty well. There's not really a demand, lack of demand. There is actually a lack of supply. If you want to help the housing market be a little bit more fair, I guess, for people, maybe encourage people to sell their homes somehow and get out of their 3% rates and take the current rate of 6%, because the reality is there's so little supply that the more demand we create, the tougher that sort of supply and demand, tug of war gets, and the higher prices go. And then again, the harder it is to qualify and the harder it is for people to pull the trigger. So it is kind of odd timing also, because really we don't need more demand. We need more supply.
Yeah, that's the thing. I guess things like this, and makes really good, really good talk radio, because it's like, it doesn't make any sense. Economics 101. It's like, no, it never, ever works to tax people more. It just doesn't,
No, but it's a vote thing. I mean, look, he's running again, and for sure it's a matter of, hey, look, I'm trying to help as many people as I can, and so, and I get that move,
yeah,
and I'm all for helping more people. I truly am, at the cost of those who have really done well credit wise. I just don't think that part is fair.
Yeah, no, and it's just such an odd, funny thing to do now. Just like, let's try and, I don't know. I don't like penalties. I don't like taxes. I really hate taxes. I spend my career trying to reduce people's taxes, and then you get these things where you go, oh man, sorry for penalizing you. Anyway, I do want to.
Sorry, I was just going to say, David Stevens, a former federal housing commissioner and former CEO of the MBA, the Mortgage Bankers Association, is on record as saying that this is a blatant and significant cut of fees for the highest risk borrowers, and just doesn't see the sense in it.
Yeah, and it's not gonna. It doesn't make the guys that are struggling to get mortgages. It doesn't make them better borrowers. It doesn't mean they're going to default less often than the statistics show. It doesn't mean they're going to be, a better homeowner. It doesn't mean anything like that. I mean, it's been statistically proven. You start handing money out to people or hand them homes, and you get the default rate is just it's unbelievable. So anyway, yeah. So on a more positive note, I'm glad, the housing market. Yeah, we have a supply issue. We've had, 10 years of underbuilding has got us where we are now. A lot of other things going on, but talk to us a little bit about, you heard earlier on the show, you had Noah, our producer, was saying that, he's thinking about, in the next couple of years getting into as a first-time home buyer. So from your chair, are you dealing with the money side of things and getting money? What suggestions do you have for somebody that's within the next, a couple months to a couple years from now? What should they be doing to kind of get themselves ready, get them set up to figure out how much they can afford and how big of a house to get into?
Yeah, the first thing I think I would say is that, income is typically the driving factor these days when it comes to qualifying for a loan. Often is the biggest challenge. I frequently, people call me and they say, hey, I'm ready to get a mortgage and I know my credit score is really, really great. And as we've just spent 20 minutes discussing, it's really not all about your credit score. It's good to have good credit. I'm not saying you shouldn't, but really it comes down to the debt to income ratio. And when we're talking about debt to income ratio, we're referring to the new mortgage payment that you're going to have, the principal, the interest, the taxes, the insurance, the HOA fees, anything else that might be attached to that mortgage and the ownership of that home. We take that number, we add it to any other obligations that you have, and specifically obligations that would show up on a credit report or that are contractual. Okay, so a car payment, a student loan payment, a credit card payment, child support, something like that. We're going to add those things up and we're going to compare them to your gross income. And you pretty much have to fit in the box. And if you don't, it doesn't matter if you have $100 million in the bank. It doesn't matter if you have an 800 credit score. You must meet the debt to income ratio requirements if you want to get a kind of vanilla or conventional type of home loan and not something that's more exotic and more expensive. So one of the mistakes I see that people make is they take actions with respect to paying off debt or trying to improve their credit without actually seeking the advice of a professional first. They kind of want to make themselves as pretty as possible before they go to that meeting. And sometimes in that meeting, they discover that some of the things they did, although they weren't maybe bad moves overall for their financial future, they weren't actually moves that are going to help them when it comes to buying a home or qualifying for a loan. People frequently pay down credit card debt when really what they need is some reserves. And so they come to the mortgage appointment and they say, good news is I've got no credit, no debt. The bad news is, I don't have any money anymore because I just paid off everything. And now they can't get the loan that they actually could have gotten if they just had that car payment outstanding.
2 minutes.
Or something like that. So I think the first thing is go to a professional that you trust that will give you good advice and is not just a salesperson, and have an assessment done. You can always make changes after that appointment. Making the changes before the appointment can be hard to undo.
Interesting. I mean, that's me. I mean, I'm a big fan of meeting with a professional before you go and do anything really. And I've been telling my kids that, they're looking for homes and they're looking and they think they're in this price range. I go, you don't know what price range you're in. You have no idea. Talk to a mortgage professional first. And unfortunately, none of them are in California, but so it's just meeting with a loan professional, I just think is super important. And, I'm just glad that you came on the show today. And that's really the message I want for people. This stuff, talking about being penalized because you have great credit and all that, it stinks. It's a tax. We hate that kind of stuff. But bottom line, get qualified for mortgage. If you're in the market, you need housing. That's just one of these demands. People always need housing. Talk to Kory, give him a call, 619-554-1327, 619-554-1327. Just call him and meet with him and just say, hey, I'm thinking about buying a house. I'm not sure what I should be looking for, what my range should be. What can I do to give it? And then you have that meeting with Kory, and you're willing to do that kind of a meeting with my client or our listeners, right, Kory?
100%. Happy to do it. Love what I do and happy to help people.
Okay. There you go, folks. This is Kory Kavanewsky, 619-554-1327. Meet with him. If you're thinking about buying, meet with him first and kind of get your feet under you and figure out, what direction should you go. You got a professional available to help you out. That's going to be Kory, 619-554-1327. Kory, thank you very much for being on the show today. Hope you have a great rest of your week, and maybe we'll talk to you next week or something. All right. Thanks, everybody. You listen to the Word on Wealth. We'll be back in just a second.
You've got questions. We've got answers. This is the Word on Wealth with Kory Quackenbush of GQ Law. Gary's here to give you peace of mind with expert estate planning, trust administration, inheritance, and probate. Call Gary to build, protect, and transfer your wealth. 855-500-TRUST. GQlaw.com. Kory Quackenbush of GQ Law. Call or click to request your free initial consultation or to talk with a member of the team. Call Gary at 855-500-TRUST. GQlaw.com.
All right. Wasn't that fun? So I told you we have all kinds of things coming up here on the Word on Wealth, and having a mortgage professional on, that it just feels so good to have Kory on there talking about this thing. And then I know it's such an odd thing to talk about is, being taxed with the mortgage industry like it is right now. Just so, I don't know, just so bizarre. The mortgage, we're having a struggling economy, and then to add a new tax doesn't make a lot of sense other than to buy votes. And that always annoys me. But, we're coming into the elections thing again, the election cycle. And so we get to always hear more fun stuff. So anyway, I'm glad to be here with you guys here on the Word on Wealth. Kory is our mortgage expert. If you have questions for him, it's 619-554-1327. It's the thing that you get with Kory, and then the way, his thing is meet with a professional, find a professional that you like, find a professional that you trust, somebody that does mortgages. If you want to meet with Kory, you've got his phone number. And if that's something that will work out and you gel with him, it resonates with you, you like what he's talking about, you're comfortable with what he's saying, then have Kory do an analysis for you and figure out how much of a house you can afford and what are recommendations on, what you should or could be doing to improve your chances of getting a better loan. If you have questions about buying and selling, because you're thinking, I'm thinking about selling my property, I'm thinking about buying a piece of property, whether it's a rental or a single family unit or, an apartment building or whatever, you talk to Ken Pecos, our real estate guy. And then, if you have questions about money and investing and buying and selling stocks and bonds and your retirement accounts and all that, you call Anthony Wright. So the reason we are lined up with these professionals is because I want you to have the ability to find professionals. It's not easy. There's so many professionals out there. The mortgage business, the real estate business, the finance business, it's a super competitive market, and you've got to find people that you like. I mean, the legal business, estate planning business, super competitive. There's lots of us out there that are doing the wills and trusts and power of attorneys and trust administration and probate and all that kind of stuff. So you just have to find somebody that you're comfortable with. And if it's me, that would be fantastic. I would love that. I'd love to meet with you. I'd love to talk to you, show you what I can do for you. That's my thing. I would love that. And you've got to find somebody that you trust. And I just couldn't emphasize that more. But I liked how Kory's approach, and he's saying, not necessarily, call me, I'm the only guy that can do it. He's just saying you got to find a financial professional, mortgage professional that you trust and that you know they can do the job. That's really where you are. You need to get help. Okay. So from an estate planning standpoint, I ran into this again, you guys. I know we're all trying to save money. I mean, we're talking about the economy and taxes and all this kind of thing. And I know we're trying to save money. Not by cutting corners, but by doing things ourselves. I mean, I remember, when I was a lot younger guy, I did everything for myself with my car, and it was fine. I mean, I did fine because I had these, cars that were very simple, just kind of a V8 engine with a four barrel carburetor, maybe a standard transmission, so I could pull the tranny out and do the clutch. And I've done engine rebuilds and, valve jobs and all kinds of stuff like that. And I was totally capable of doing it. And then as cars became more and more and more sophisticated, it's just much more difficult to do. So I don't do my own mechanical work anymore. I mean, it's expensive, but maintaining a car is better than having to, put the thing back together when it blows up and destroys itself. But I know how to do that stuff. I just don't do it anymore because it's too complicated. There's too many electronics, too many computer things. I don't have this fancy equipment to make sure that the work that's being done really needs to be done. And if you notice, when you go into mechanic, for example, the first thing they want to do is hook your car up to a computer, because there's a port, like a plug them in or thing under the dash of your car, and they can plug in this computer and it can tell you everything the car's been doing. It's missing on cylinder what, it's running, it's starting to ping, and they have all these computer diagnostic that your car computer's running constantly, and they do this analysis and say, okay, here's the things that we think you need to do, A, B, C, D, E. But those are, but at least you have that analysis, and then you can make a determination, this is what I want to do. That's consulting a professional. I mean, you could go, I've been kind of doing this lately. Well, maybe my truck needs a valve job. I saw a YouTube video and it sounds like, the a Ford F-150, 2007 that I have, 184,000 miles, probably needs a valve job. What does that mean? And, what are the parts that I need, the lifters and the roller followers and all these different things. So I could order them. I could take the parts in. I could do it myself. I could spend a weekend doing it. And I'm going like, then what if I mess it up? What if something goes wrong? What if I don't do something right, or I drop something down in the engine, or, and I cause a problem? Well, if I do it myself, and I'm not quite expert at what I'm doing, I think I'm doing okay because I saw a YouTube video and I'm pretty sure I know what I'm doing. Well, if I mess it up, I got to fix it again. It's my fault. I don't have insurance to cover myself if I mess it up. But if I take it to a mechanic, person that does this for a living, first of all, they're going to have the experience because they've done it a gajillion times. They're going to have all the right tools to fix the thing if something's broken, to drill out a cracked bolt or something like that. They have all that. They can make all these determinations like while they're in there, is there something else wrong? That's the stuff I can't do. And if I try to, I don't have access to the parts. I don't have access to the right tools, and I could really get stuck. Well, that same thing kind of happens with your estate plan. If you do an estate plan yourself, I understand trying to save some money, and estate planning does cost money. There is some, data that you have to provide to your attorney to put an estate plan together properly. And that's work. I understand. I don't like to do any extra work either. My days are very full of things that I have chosen to do. And sometimes I feel like things are imposed on me, but it's my choice. I mean, I could say no, I could pay suffer the consequences or whatever. But I think if you're doing your own estate plan, or if you've done your own estate plan, do you really know whether it's right? Well, you can read through and go, yeah, Gary, I downloaded this trust document and it said Kentucky law, and I just changed it to California. So now it's good under California law. I said, okay, that doesn't make it good under California law just because it says California law. But do you know that that document has all the provisions that you need? Does it give, allow certain things to be done? And you might think, well, Gary, who cares? Because it says on here, when I die, my stuff goes to my 4 kids in equal shares. And that's what I want. And if one of my kids has died before me, then it can go to their issue or their grandchildren or whatever. And so I'm totally fine with that. So then I look at that and go, well, are you sure that's what it's doing? And are you sure it has all the legal coverage? Now, the biggest problem I run into would be that somebody does their own estate plan, whatever, and they don't have a will. They just said, I just want a trust. That's all I want. So they did it themselves. They don't have a will to support it. They didn't put the house in this new fancy trust that they made. They don't have power of attorney for healthcare. They don't have financial power of attorney. They don't have limited durable power of attorney. They don't do transfer documents. It's like, okay, you have this document, whether you got it for free or did it yourself. Maybe it was done right, maybe not, but let's assume it was. Is there anything in the trust? Because if there's nothing in the trust, if stuff was not properly put in there, the trust is invalid. So it's not even worth the paper you put it on. You got to get it right. So what I want you to understand is that having a trust is not all you need. There's about 12 documents that need to be part of a good estate plan to where it will actually function. So if you put the trust together wrong and you became incapacitated, somebody now, while you're alive, has to interpret what that trust document did. And if they can't ask you the question, or the money's not just going to distribute to kids, it's money that's now supposed to be available to you. Did you, in that document, put in enough documentation, enough writings where it authorizes your trustee? Okay. Now this would be if you're incapacitated, you have your successor trustee that is functioning and managing your money, controlling your money. And that successor trustee needs to pay out to take care of you for your medical and your housing and your assisted living and everything that's going on. Does that successor trustee have enough authority or powers in that trust document to really take care of you? And do they have the ability to finance or sell the home to be able to take care of you? Do they have the ability to somehow get money to take care of you, to pay for assisted living or to pay for home health care or whatever? That's the stuff you may not see in just a really simple, easy peasy downloaded trust. You may have downloaded a death plan. You want a life plan that deals with disability and death. I'm happy to help you. 855-500-TRUST. Let me do your estate plan for you. 855-500-TRUST. Get it done. Get it out of the way. Get yourself prepared. 855-500-TRUST. We'll be back in a moment.
You don't need to know everything. You just need to know where to find answers you can trust when you need them. Welcome to the Word on Wealth with Kory Quackenbush. We're here to help you build, protect, and transfer everything you've worked hard for with expert estate planning, trust administration, inheritance, and probate. Call Gary and the team at gqlaw.com, 855-500-TRUST.
Gary, your team at GQ Law are experts at solving IRS and state tax problems. Talk about that.
When people have a tax problem, it tends to really stress them out. And one of the things we've been able to do is figure out how to resolve tax problems. One thing we might be doing is setting up a payment plan or getting a collection delay, maybe getting a determination that the person shouldn't have to pay the taxes at all. We do offers and compromise. We do auto reconsiderations. And one of the things that's a really powerful tool that some people don't recognize is sometimes bankruptcy can be used to actually eliminate taxes when there's certain conditions of the code that are met. So we can do all kinds of things. After we analyze your situation, we can figure out what's available, discuss your options, and figure out which ones to implement, what it's going to cost, how long it's going to take. And we can get people out from under all kinds of tax problems so they can sleep again. That's our goal.
Request your free initial consultation. gqlaw.com, 855-500-TRUST, gqlaw.com.
Who will you trust with the biggest financial decision of your lifetime? If you're planning to buy or sell a home in San Diego County, do what I do and work with the true San Diego real estate experts. Ken Pecos and the Pecos Group helped me and my family. They can help you. This is Kory Quackenbush of the Word on Wealth. You hear Ken every week here on the Word on Wealth. He's our expert. He's got integrity, exceptional service, deep knowledge of the San Diego, Coronado, and South Bay regions. These are just some of the reasons that Ken Pecos has completed hundreds of transactions. He manages a powerful team of professionals at the Pecos Group. From single-family attached homes to luxury high-value waterfront properties to apartment buildings, Ken Pecos is ready to help you avoid problems and costly mistakes. Learn more online at kenpecos.com. That's Ken Pecos, Pecus.com, or call 619-977-8419.
DRE number 010566969, brokered by eXp Realty.
You're not alone. Ask for the legal help you need. Call Gary and the team at GQ Law.
Gary, you're not alone.
500-TRUST or
We'll point that out.
download Gary's free ebooks and videos. Read Gary's blogs. Call or click to request
You are alone.
the GQ team. That's GQ
I'm on the air and I'm alone.
855
I feel like it.
500.
You're live.
And I've been told that I am alone. That was mean. My
You're
producer is
never
whispering in my
in
ear.
your ear, Gary.
Yeah, I know. Noah's going, Gary, you're alone. I'm not alone. I've got listeners. I do.
Many,
Oh,
many,
there's
many,
so
many listeners.
My gosh, there's so much to talk about. I could do this all day. I really could, but I'm only going to do it for a few more minutes. If you got questions for me regarding your estate plan, give me a call. Call me at 888-344-1170. Now, I'm not bored on the air saying, oh my gosh, I don't have anything to talk about. I've got lots to talk about. I do have a free book, though. And many of my listeners have gotten it. So what I prepared for you is there's a book called Living Trust Basics. It is on my law firm's website, gqlaw.com. So you go to gqlaw.com. GQ like Kory Quackenbush, gqlaw.com. So you go to gqlaw.com and you find this book, and it's a white book cover that says Living Trust Basics. You click on it. It's on the right-hand side of every page. You click on it and it says, oh, you want a copy of Gary's book that talks about estate planning, living trust basics, wills, trusts, power of attorneys. Click on this and you put in your first name and your email address, and it sends you a PDF. It is 8.5 by 11. It is only 21 pages long, 22 pages long. So it's not a hard read. It's an outline that I prepared over my 30 years of lecturing on this stuff all over California. And so this is a booklet that I've handed out hundreds and hundreds and hundreds of copies. And so it's all over the place. It's for free online still throughout the month of April. Go to gqlaw.com, get Living Trust Basics. And it just has the basics. It talks about living trusts. So living trust is a good thing. And there, I just had my camera off and now it's back on. So if you're watching on YouTube, sorry about that, guys. All right. So this show runs live every day, Monday through Friday. On Friday, we have our guests, which are going to be our Finding Joy Friday guests. Tomorrow, we have Ken Pecos of the Pecos Group. It will talk about real estate, tell us about the market, how to get in, how to get out, how to buy, how to sell. That's Ken Pecos. It was really fun to have Kory on, Kory Kavanewsky just a few moments ago, have him on the show as our mortgage expert. If you want to get a hold of him or Ken, you can just call me, 855-500-TRUST, and we can get you those numbers easily. So you only have to remember one number, 855-500-TRUST, or gqlaw.com and get your free book, and then contact us and we will give you their numbers. All right. A couple of final cleaning up items that I would recommend for you is doing trust yourself. You know, I'm not a big fan of that. I know how to do trust myself. Actually, that's probably true. I know I can do one myself. I have the machinery to do it. And I even know how to advise myself. If you have done a trust on your own and you think, gosh, if I take this into Gary, I'm going to be so embarrassed because Gary's going to go, dude, I told you not to do it yourself. What are you doing? I don't do that. Okay. I'm not into shaming. I am more into looking at it and saying, okay, this will work or this will not. And what I am more interested in is getting your documents in order, because I will tell you from firsthand experience and secondhand experience and thirdhand experience, those who die with a properly put together estate plan have much happier relatives, surviving family members, than those who do not. That's the way it is. We're dealing with probate on estates where people had a trust, house in it, rental property, investment accounts, and whoops, they forgot to put in a condo, or they forgot to put in an investment account with, $400,000 in it or $200,000. Those are outside of the trust. Those go into probate to go into the trust. So that's going to delay things. I mean, it's not the end of the world if you have to go through probate on some of your assets, but if it's all of your stuff, it's tough. So what is the big deal with probate? It is that when someone has no will or trust, let's just say they have a will or no will, because either way, will with or without a will, it goes through probate. You have to have a trust to avoid probate. That's the bottom line. That's just the absolute truth. If you don't have a trust, you cannot avoid probate. Okay. So if you have this, a piece of property, let's say there's a mortgage on the property and there's insurance and all that stuff, and the person dies. Okay. And now the house is there and there's still a mortgage owed on it. There's no trust. So now how do we get the money to pay the mortgage? Because if you don't pay the mortgage, it goes into foreclosure and you could potentially lose the house and it gets sold for the mortgage balance rather than the fair market value. So if the house now is headed to foreclosure because of some financial issues, and it does happen, sometimes people get sick and they forget to pay their mortgage. So let's say somebody dies, they don't have a will, no trust, and now the mortgage is behind and they died. So the mortgage is due, it's $3,500 a month. How are you going to pay that if you can't get to the money in the estate because he had no trust? So that means any of the bank accounts are going to go through probate to be distributed according to the terms of the law. If you had a retirement account or investment account, those things are going to go through probate to be able to handle them. So you can't get in probate even fast enough to pay that mortgage. Somebody's going to have to come up with the money. So usually what you have is beneficiaries that are coughing up money to pay mortgages to try to keep things from falling apart and going into foreclosure. So they're costing a lot of money. Now, most of the people that I talk to, they say, I would never want that to happen to my kids. When I die, if I have debts, I want them paid, but I don't want my kids having to fight over, who's going to pay dad's mortgage for the next 6 months while it goes through the probate process. Most of my clients they just don't feel right about, having their kids kind of mop up things and kind of pay for things and have a lot of money and time and expense to try to organize things that weren't organized. So the estate planning is really important because of that. The other thing that we run into a lot is power of attorney. So power of attorney is really tricky. And I think in every situation, it is very different. Okay. So for example, if I gave, if I gave you a general durable power of attorney, you could do anything with it, anything that I could do legally. That means you could sell my house, you can sell my car, you could buy a car, you could buy a house, you could open a bank account, you can close the bank account. You can do anything with the power of attorney. If I gave you a power of attorney, a general durable power of attorney, you can do anything that I would do. Whether I wanted to do it or not, or whether I would have done it, it doesn't matter. If I could do it, my power of attorney can do it.
I guess what you're saying is don't do that.
Well, it's just power of attorneys are really, really powerful. And I don't think general durable power of attorneys are really a safe alternative. The alternative is to put your property in a trust, and now it's under the control of a fiduciary, which would be you and your successor trustee. What I do with power of attorneys is I want to know why you want a power of attorney, and let's create a power of attorney that will take care of the why, the reason you need it, not just like this general overall. So, part of that is that if you're doing it yourself, you think, I'm going to do a power of attorney for sure. Most people don't even need a power of attorney. Most people need a limited durable power of attorney, but not a general power of attorney. All right. So if you want help with this, just give me a call. I review trusts many times a week to figure out whether the trust is whether it will work or not, whether it's properly funded. I want to make sure that you have a bunch of documents in your portfolio. It's going to be a trust. You have to have a will for each husband and wife, or just if you're just by yourself, it's just the one. And then you have to have a medical power of attorney so somebody can make medical decisions for you in the absence of your mind. And then a limited durable power of attorney so that if you have money that is outside of your trust and you became incapacitated, your power of attorney would make it so that that money can be moved into the trust and then controlled and governed and spent on your behalf. Super cool, right? So estate planning, it's a big deal. We do, life plans. We're not doing death plans. It's kind of a buzzword. It's like, we're not just planning on you dying. We know that's going to happen, 100% chance of that. But what about the 70% chance that you'll become incapacitated? We're dealing with that too. Does that cost extra money? No. All this stuff is all, I do my estate plans based on one basic price. When you're done, you'll have a will, a trust, healthcare power of attorney, financial power of attorney, transfer documents, deeds to properties. We can deal with LLCs or corporations. So we can deal with all that kind of stuff for you and get it so your estate plan is just all set up just like squeaky clean and super nice. I want you to know that tomorrow we've got Ken Pecos of the Pecos Group, and that's coming up. So if you have your real estate questions, get them ready for Ken, write them down tonight, and you can call in or talk to or listen to the Ken Pecos show with Gary Quackenbush and Ken Pecos tomorrow. Tonight on the Andrea K show, on Tuesdays, every Tuesday at 7:00, I am on her show, and she is hilarious, and she asks me questions, and it's a segment called News You Can Use. And I'm the hostie. I'm an invited guest on the News You Can Use segment with Gary Quackenbush on the Andrea K show. That's tonight at 7. You guys, so good to have you along. We got Pecos tomorrow. We got Anthony Wright Thursday, and Friday we got our Finding Joy Friday. All right. Been good to have you guys along today. We'll talk to you tomorrow, same time, same station. Bye, everybody. Thanks, Noah, for all of your help. Okay, bye.
Tell a friend about the Word on Wealth, featured since 1995. With financial solutions attorney Kory Quackenbush, an expert in estate planning, wills and trusts, and tax problem solving. Kory is past president of the California Society of Tax Consultants. Reach out to us. The Word on Wealth team of financial experts is here to answer your questions and help preserve your family's financial future.
The information you hear on the Word on Wealth is for general information purposes only. This program discusses general financial and legal topics. Seek legal advice from a competent lawyer for your individual legal needs.